Welcome to This Week in Money. I'm Jim Goddard. Today, noted short-selling expert Marc Cohodes warns VC real estate, especially in Vancouver, could drop 50 to 80% from its peak value. He comments on what role he believes the provincial government played in the development of an unsustainable bubble and why he's giving us this warning. We'll also have an overview of the senior markets from CIBC Wood Gundy's Ross Clark and a wrap-up of action on the Canadian equity markets from Mackie Research's Payton Nyquvest. Plus, at the end of the show, we'll have a company showcase update from American Manganese President and CEO Larry Reaugh. We'll talk to Ross Clark right after this.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Always a pleasure, Jim.
The bankers in the U.S. must be laughing all the way to work.
Oh, yes. They came up with some very good numbers. We're in the beginning of the earnings season, so a third of the banks are reported, J.P. Morgan, Bank of America, Wells Fargo, some of the big names there. Some very, very good results. Stocks got off to a really nice move there, up 2 to 3% in the initial part of the day, but more of a sell the news type of market as far as the investors were concerned. Stocks came off just to close with small gains, but very good when we look at what's happened since November, since the election. But all the pent-up enthusiasm still has yet to be proven as far as the administration is concerned. You know, we've got next week we get the inauguration, and then that first 100 days becomes very critical to see how they're able to implement some of the new policies they'd like to put in place. And, you know, clearly it's going to take, 6, 12, 18 months before we start to see any major impacts. So we look at the seasonality factors in terms of the marketplace, and the first term for a new president, that's when you've had a non-incumbent in place, as we had, and you've now got this new president. The January effect is more significant in these years than most. So we will be watching pretty closely here. Market has been grinding its way up the last week or so, not had a lot of power behind it. We do want to make sure that the lows that we put in that first week of January end up holding, and we would ideally be looking for strength to carry us into mid-February to indicate that the year would end up with a positive bias. If we start to roll sooner than that, you can be looking at more of a choppy scenario as we move through the first quarter into the second quarter of the year.
Last year at this time, we were watching the U.S. equity markets take a pretty serious correction. Is that the kind of thing you're expecting to see, or will it be less severe?
No, I think far less severe than we saw back then. Clearly, actually in an election year, you would typically see a good hard break in January, and actually from January through March. In this case, we bottomed out with a double bottom into February of last year. But I don't think you'd be looking for something quite as severe as that. The good support areas are around, say, the 2245 level in the S&P. It's not that far beneath us. We'd have to start going through some of these levels before the catalyst would really kick in for anything really deep. I'll be looking at more into February, March to see how things are looking at that point. If we roll through some very important support levels, then there's the chance for the deeper correction. But for now, let's see how January unfolds.
The Canadian dollar has hit 76 cents plus. Is that because the price of oil has maintained plus 50?
If anything, it's a bit of a surprise because it has been underperforming relative to oil up until the last 2 to 3 weeks here, and then we've had a decent run as far as the Canadian is concerned. I'm pretty concerned, though, about the oil market itself. We still have very, very high numbers from the commitment of traders, which give us then the breakdown of commercial positions and speculative positions. The speculators have the largest net positions that they've had since we were back at $110 oil. The commercials are very short, and as soon as we start to see any little bit of weakness, probably down through the $51 level, you would see those positions start to be lightened up from the spec longs, and that would probably easily carry us into the mid-40s, $44 to $45. That also, I would expect then to see the Canadian dollar come under a bit of pressure at that point.
Well, at least we don't have $8 cauliflower just yet.
No, and I don't know that. We'll see how things go with things such as the trade negotiations and the effect that it might have on the dollar. But for now, the price levels we're looking at are something that everybody's learned to adjust to.
What
I would be looking at currency-wise here, though, is the U.S. dollar index, which topped out the better part of a couple of weeks ago now. We're around 101 and change on that index. Support is at about 98, and I would expect that you should find the support around that level. So that's roughly 3% away from where we are right now. And if we then think about the precious metals, with gold just flirting just shy under $1,200, you tack on a 3% move there, which would reflect the possibility of a pullback further in the dollar. You're looking at maybe something in the 1236 to 1240 range as a pretty important resistance level, I would say, for gold.
Do gold miners have to worry about the price of crude?
Oh, as always, that's one of, I think, a third of their total operating expense is from the energy side of the equation. And when we saw the energy prices up 2 and 3 years ago, you could see why, even when we had gold up in the $1,500, $1,800 ranges, why the miners weren't doing that well. It's just that their costs were starting to were maintaining at a very, very high level.
Ross, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Marc Cohodes, next on This Week in Money.
Always consult your investment professional before making any investment decision.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior. With a proven operator and finance team, GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Marc Cohodes, a former hedge fund manager focused on short selling. He has been called the world's greatest short seller. He's predicting Vancouver real estate prices will drop between 50 and 80% from the peak of the market. Follow Marc on Twitter at Alderlane Eggs. He's speaking to us from California. Marc, welcome to This Week in Money.
Thanks for having me.
The movie The Big Short is based on Michael Burry shorting the U.S. real estate market by shorting mortgage-backed securities. What is short selling? How risky is it? And did you short the U.S. real estate market almost a decade ago?
Excellent questions. Short selling is very risky, as I say. Always, I never advise people do this at home. Yes, I was short the U.S. real estate market back in the day. There's a Harvard Business School case about me and my exploits in a company called Novastar, which went bust. I'm going to be careful what words I use to describe it, but they weren't exactly dealing from the top of the deck. And short selling, in easy terms, or how I try to explain it, is if you're in the cattle business and you think cattle are going to fall or drop, you not only sell all the cows you own, but you borrow your neighbor's cows with the promise of giving them back at a later date, and you sell his cows. If the price of cows decline, you buy the cows back, give them to your neighbor, you make the spread or a profit. If it goes up and you say, cows aren't going to go down, you buy them back, take a loss, and still return the cows. So that's sort of what short selling is. It's a bet on declining. You think whether it's a currency, a stock, an asset is going to decline, and you make a bet. There is no way for me to short Vancouver or British Columbia or whatever housing. I'm short a company based in Toronto called Home Capital Group, symbol HCG. Been shorted for a couple of years. And they issue subprime mortgages primarily in Ontario, some in Alberta. And that's the way I'm playing this. So I have a lot of friends who live in Vancouver, and I love coming up to visit. So although people think I have some ulterior motive, I promise I do not. But this is basically one to help out the everyday BC person, because what I see going on up there is beyond horrific.
What kind of drop do you see in BC home values, especially the greater Vancouver area?
So in the spring/summer, I was on, I don't know if it was a radio or a TV. I said that I see housing is going to decline by 50 to 80%, and people thought I was out of my mind. I think since then it's down between 15 and 20. So we're sort of getting there. So I'm still sticking with the 50 to 80 from the top, and people ask, and most of these programs are too short format, but yours is a little longer. I see 50 to 80 because I view housing as shelter, and there is an affordability issue. And I'd like to use the example that I know people in the hedge fund business, and let's say they make $1 million a year. And you can use whatever multiplier you want on that. Divide it by 10, you get $100,000 a year, which is pushing it what the average BC household makes. If someone was making $1 million a year, I would ask these people, would you be comfortable in buying a $5 million house? And all say, hell no. And they keep saying hell no till we get to about $2 million. And they'd say, yeah, I could buy a $2 million house. That would make sense. So on the affordability scale, balls out, max out, a family that makes $100,000 can really only afford a $500,000 house. And that's high. That's high. I mean, really, it's a $300,000 to $500,000 house after you pay your taxes and food and cost of living, etc. So the median home price in BC when I made that statement was about $1.1 million or $1.050, somewhere in there, median. So to get to the $500,000 range or lower, you need a drop of 50%. So that's how I get my 50. I get my 80 from the high-end transactions that the money launderers are buying, like the college student who bought that house for, $31 million, something like that?
Exactly.
In the spring?
Yeah.
Huh?
Yes, you're absolutely right.
Yeah, $31 million. So she bought Peter something's house.
Peter Brown.
So when asked what your father does for a living, she couldn't answer, which is suspicious in itself. So we take the $31 million house. So again, I know a bunch of people up in your neck of the woods, some who live in White Rock and some who make a lot of money. And I said, are you familiar with that property? Yes. So I polled 10 people what that house or property is worth. And to a man, the numbers I got were somewhere between $5 million and kind of $6.5 million of what the thing's really worth. And if you had the money, what you would buy it for. So $5 to $6 million from 31 million is roughly 80%. So that's how I get my 80% number. And I think that house, at some form of time, when people crack down on the money laundering and thing, will revert back to the norm of this $5 to $6 million, which will give you the 80%. So that's how I get my 50 to 80. And in the States, which is economically stronger than BC at the time, you know, home prices in Florida, Arizona, San Francisco Bay Area, San Diego, LA, you know, went down on average 58%. So, again, I'm not a crystal ball guy, but that's what I think people can look forward to seeing at some point in time, and I think it's beginning. It's beginning in earnest.
Has the Vancouver real estate bubble already burst?
Yeah, it's burst. The you know, it's kind of sort of like an appendix that has poison in it popping. How it's dealt with, what happens, how it shakes, is yet to be determined, but there's clearly something has changed and changed remarkably since the spring and the summer, in my opinion.
Is it possible to predict how long a real estate market bubble bursting might take to go from peak to bottom?
Well, it's going to be a long way till you so-called see a bottom, because the problem I see, is the money driving this move is capital from China, a totalitarian regime where that money was illegally obtained and is being washed in BC. And there's capital controls on in Vancouver, in China. And now it would appear that the Chinese government is cracking down further on this. And without the foreign bid in the price of housing, it's anything goes. I mean, you guys are in uncharted waters, and you overlay that to the political climate with Christy Clark and her band of merrymen kowtowing to the real estate industry. It's very dynamic. It's very fast water moving under the bridge, very dangerous.
If and when the Vancouver market collapses, what are these Chinese buyers likely to do with their Vancouver real estate?
You know, that's an excellent question, and all I can do is give you and your listeners an option of choices. Does the Chinese government move to seize assets? Does the Chinese government work with the Canadian government to arrest people and return them? What happens, and how is the Chinese crackdown going to manifest itself? They tend to be momentum players. You know, what's good for the goose is good for the gander. So if all of a sudden people see a crackdown coming, instead of playing in Vancouver, they'll play in Montreal or San Diego or Mexico City or Hawaii or Singapore or any place other than Vancouver. And then given the leverage in the system, and again, if you loan money to somebody, whether it's a Chinese national, money launderer, criminal, Canadian, whoever, you fully expect to be paid back. And it then puts pressure on financial institutions to do something to remedy this. So you need to move asset prices down to a level where they'll trade to legitimate buyers, which frankly is good news for inhabitants and people who live in BC. I mean, the ironic part of this is what I see happening in the long run is really good for British Columbia, because people who want to live there, start families there, and do things there will actually be able to finally afford to live there. This whole desire myth and thinking that high real estate prices are good is just really ass backwards. And part of this Asian whatever influence, there never used to be a fentanyl problem in BC prior to this real estate thing going crazy. And if you really back up and look at what's going on, when you allow a criminal element to enter society or your society and you don't do anything about it, you lose control of your town. You lose control of your province, which is exactly what's going on. And Christy Clark and her pals could just look the other way on all this. And it's very dangerous unless something is done. And I'm just amazed that it's been allowed to go on for as long as it has. I really am.
Do you think the 15% foreign buyer tax in the greater Vancouver area was just window dressing, after the horses bolted the barn, so to speak?
I mean, it's something. I mean, I would like to say it's sort of pissing on a house fire. I mean, it's something, but it's not the solution. I think the solution should be, look, this is bull. We know what's going on. You need to verify this before you buy a property. If we catch you, Mr. Real Estate Agent, doing this, you will lose your license for 5 years. You will be fined $1 million. Second offender, you'll be thrown in jail, and the properties will be seized. I mean, you need to crack down on illegal activity. I mean, China has a $50,000 capital control limit. You tell me with a straight face how a Chinese student can buy a $31 million property. I mean, I'm all ears. Just let me know how this happens. And to sit there and not do anything about it implies to me that the politicians are either in on it, corrupt, or so damn stupid they shouldn't even hold the job. I mean, elected officials work at the request of the population, right? It shouldn't be a self-serving thing. They work and are elected at the honor of the people who cast their votes. They work for the people. It would appear they're working for themselves and their donors. I mean, I'm from Chicago. I'm very familiar with aldermen and mayoral politics in the city, where it's completely corrupt. And, 15%, make it 70%. I mean, you should say housing is for the people who live and work in BC. If you want to speculate on gold, silver, oil, iron ore, stocks, bonds, this, that, and the other. But don't speculate on our housing stock, and don't speculate by laundering money here, because you will kill the economy. People can't afford to live there. They will pick up and they will move. And that's not good. It's not good for anyone.
When real estate markets collapse, does that cause sale volumes to increase or decrease?
I mean, eventually, all that's really going on now is prices have come down. I mean, I've noticed a lot of properties are on the market, pulled from the market, re-entered with a price much lower, pulled, re-entered. The first thing that happens is prices come down. And then eventually you'll start seeing some form of volume when there's bids. But there will be no natural, real buyer of that $31 million place for a long way down if they ever want to sell. If that property gets seized by whoever and is put up for sale at auction, it will not trade anywhere close to $31 million if there's not a money-washing bid in the marketplace. Nowhere close.
Is this 15% foreign buyer's tax a real, actual thing, or is it more of a psychological effect?
Probably a little of both. Because when you put in something as flimsy as that, the system can be gamed, and there's things on the internet and Twitter about how people can try to get around it. And by trying to get around it, if there was really an impetus behind it, it could have a whole lot more teeth, and people could do, more things with it. So, I mean, I just don't know, but it seems like if they really wanted to tighten the screws, they could make it a lot tighter than it currently is, that's for sure. I think it's psychological. I think there's some form of window dressing to it.
We'll have more with Marc Cohodes next on This Week in Money.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking to Marc Cohodes in California. He's a former hedge fund manager focused on short selling. He's even been called the world's greatest short seller. Marc, before we get back into the Vancouver real estate market, could you maybe give us some instances of where your short positions got you the most money?
Well, that's I'm an old man, so historically where you do the best is when you're in a extreme minority view and your view comes to pass. I remember being short a frozen yogurt franchise some 30 years ago called This Can't Be Yogurt. And at the time it was perceived to be the next McDonald's. And I think there's very few This Can't Be Yogurts around anymore. Turned into a complete and utter fad, much like iOmega and things like that. So you have to be able to stand alone, have courage of your convictions, try to see things others don't, and know that your view tends to be very unpopular. You attract a lot of people who wish you ill and harm, but just the more minority I am in general. But that doesn't mean I'm a dim view guy. I happen to be a very optimistic guy. But in the case of the YVR real estate, I'm very troubled by the goings-on.
Canada doesn't have a mortgage-backed security, so how can one short the Canadian and specifically the Vancouver real estate market?
Well, there's various ways, you can play Canada. There's no pure way to play Vancouver. At least I haven't been able to find one. Again, I don't advise shorting stocks for probably anyone listening. The best way you could probably do that is if you're over leveraged and are speculating in real estate, my simple advice is to sell and sell immediately, and don't find yourself in debt. Only own what you can afford. If you can't afford it, don't play. And then when price is correct, you'll have your money and you'll be able to buy. When the U.S. had its issues, I knew a lot of people who were very over-leveraged in real estate, and I begged people to sell. Some did, some didn't. And the ones who did were very happy they did. So, I don't know. I just have a point of view. I never tell grown men or women what to do, but I feel very strongly about this Vancouver thing, which is why I have no problem speaking out. Part of the thing, or the conclusion in the Harvard Business School case, was if I ever was as outraged about the North American stuff, or specifically Novastar, that I saw again, I should speak out louder, bigger, harder, stronger. And that's what I'm doing.
Do you have a particular reason why you're interested in the Vancouver market?
Well, I view myself as sort of a historian. I'm a creature of pattern recognition. I get turned on by fraud. I'm excited by anomalies. I love the town. I've been going there for the better part of 25 years. I have fun up there. I have friends up there. And it's sort of in my backyard. And I see the combination of high prices, not very high levels of income earned, money laundering mecca of North America, political corruption, or as I see corruption, that's my opinion, and you overlay that with a general economy which at best is okay. I mean, it's not like the lumber business is booming, or metals or mining are booming. I mean, if you break down the BC economy, it's okay. The only abnormality is the price of housing. And the price of housing, which is being manipulated by a totalitarian regime, China, and greedy real estate people, is kind of no way to run a railroad, and makes it a very dangerous thing. So historically, there's a lot of factors right now going on in Vancouver which lead a guy like me to believe there's problems at hand. So I'm trying to do what I can to solve a mess, or help people solve a mess.
In other words, you're not looking to short the Vancouver market. You're trying to make sure that people here don't lose their shirts.
I'm trying to make sure people don't lose their shirts, their ass, or become debt slaves for a generation. It's that bad. And if I can help one person, 100 people, or 1,000 people not have their lives ruined, then I'm doing some good somewhere, right? If this whole thing can get exposed and stopped, and the town and the area becomes affordable again, so people can actually live there and work there, that's a plus as well. I can't tell you how many inbound emails, whatever I get, from people saying, I make a decent living, I can't afford to live here, what should I do? Right? So for the amount of money that people make, you can easily live in Denver, Atlanta, Nashville, Memphis, San Diego, Oregon, anywhere, and have a quality of life where you can at least afford to live. And YVR is being taken over by people who have no intention of living there, working there, paying taxes there, or consuming there. So why is this good? The politicians, the inhabitants, powers that be should want housing as low as possible so people can live there, work there, and help the economy, consume there. Because right now it's just out of control.
The Christy Clark government has come up with a $37,500 mortgage assistance plan where you get the money interest-free for 5 years if you're a new home buyer. Is that something that could address affordability, or will they just boost prices by $37,000?
I don't think it's necessarily going to boost prices. It sure doesn't help affordability. It's kind of the Bob Rennie perpetual thing to help condos. You know, you would think with the amount of homelessness and drug addiction and abuse there, and their inability to come up with salt and salt the streets, they take the $37,000 and help the homeless, or help people who are addicted to drugs or things like that. You would think that that money is better spent elsewhere than giving someone $37,000, which is only more debt. It's just a loan to buy a place for $700,000. If you don't have the income and something's not affordable to begin with, $37,000 is not your answer. So I don't know what she's trying to do. I know she's not a fan of mine. I think she's awful. And she's trying, obviously, to do something to try to get herself elected again. So, which would be a shame.
Getting back to the whole deal of shorting, if you're on the wrong side of a short position, how long can you stay short before having to cover?
Well, you can stay short a very long time. You just have to put up more collateral, and you know, I stay short till I think I'm wrong. If I think I'm right, I hang in there. Costs me money. I lose. Doesn't feel good. But, you know, people have different levels of staying power. So I tend to be a tougher guy rather than a softer guy. But that's a good question.
What requirements are needed to enter a short position? Do you have to be able to borrow the stock or have a significant cash position?
I think the first thing you need to do is be able to borrow the stock. So you call your broker and say, I want to short XYZ. They can borrow it, and then you put up collateral. And as it goes against you, you have to put up more collateral. And if it goes your way, you have less collateral and make. So, I mean, it's a high-risk adventure that I advise only people who like being shot out of a cannon do. I mean, there's very, very, very few people who want to do it, think of doing it, and who are sort of professionally good at it. So,
if you're looking at shorting risk, is it true if you naked short, you can lose in excess of 100% of your money? If you use put options, you could lose 100%. And because of this, do you hedge your short positions?
Naked shorting flat out is illegal. So naked shorting implies that you don't have the shares borrowed. So, you know, that's just something that doesn't happen, or I've never done naked shorting. Puts, you buy a put, which is an option, a bet on something going down, and if your put's $3, the most you can lose is $3. Right? You put whatever you put up and buy a put is what you can lose. When you short a stock, yeah, theoretically you have unlimited risk depending on what the stock does, but that's part of the thing. So you can cover your short, you can hedge your, there's all sorts of tactical ways you can do that. But that's, different strokes for different folks, and depending on what you're involved in, time frame, story, things are known to change, so it all depends.
In Canada, the uptick rule was removed, opening up the stock markets, including the junior markets, to predator shorting. Without the uptick rule, could shorters target a junior company and put it out of business?
My blanket answer for something like that is always no. Shorts can't put anything out of business. Businesses put businesses out of business. Shorts can make a bet on a stock one direction or the other, period. But thinking that, for every seller there's a buyer. If I wanted to buy Alder Lane Farm stock and shorts wanted to drive the stock down, I would welcome it, because that means I could buy the stock cheaper, which is ultimately what I'd want. Buy low, sell high. So to me, it's all about being right or being wrong and having the fundamental case, whether you own something or you're short something. And if you're right, you should win. And if you're wrong, you should lose. I'm not in the spread and story manipulation game. And I think by and large, most participants don't play that way. So,
do you think Canadian stock markets, and especially the junior markets, would have more stability with the reinstatement of the uptick rule?
Nah. No, I think, back in the old days, maybe, but things now are so fast and they're so efficient and they're so globalized. If you want to sell the stock, knock yourself out. And if you want to buy the stock, knock yourself out. I think in junior stocks or senior stocks or whatever, it's kind of all a catch as catch can. There's a lot of action in the marijuana stocks in Canada. I'm not involved in them one way or the other. But, to the victor go the spoils. Some think they're too high, some think they're too low, and that's what makes a market. Everyone's entitled to an opinion, and, good luck to all, as I like to say. GLTA.
What's your opinion of legalized marijuana, seeing as how California just voted to instate it?
I'm not a marijuana user or anything like that, but if you're an adult and people if you can drink, if you can smoke, if you want to do marijuana, God bless you. If you're going to buy it on the streets from some dirtbag, you're better off buying it from a regulated entity that's competitive and consumer pays the lowest price. I'm not a policy guy or this, that, and the other, but I figure if you're over 21 and you can buy liquor and do stuff there, I'm to each his own, really.
Mark, what do you see happening in the new year when it comes to housing?
I think you're going to see more along the lines of what's been going on. I think prices are going to keep coming down. There's not a lot of activity because there's not a lot of real buyers. And depending on what goes on with China, capital controls, asset seizures, roundups, it could get very dramatic and it could get very violent. As you get closer to your guy's election, it's going to be interesting what comes out from all sides. And I think people should start, thinking about a model that this high price of homes concept is really bad rather than good. It's a real negative rather than a positive. It benefits far fewer than it helps. So if people started demanding lower prices and looked at the economic dynamic on who's rewarded with these high prices, I think it would have an impact.
Well, somebody pointed out to me that on $37,000 with this mortgage helper in BC, a real estate agent, if they're getting 7%, will get about $2,600 of that.
Yeah, well, I think the balance of the real estate interest in politics needs to cease. I think the people who've made money from the high price of real estate, I think that needs to slow down dramatically in the people who work hard for a living, who don't cater to money washers, etc., get rewarded rather than the other. I mean, I think the system is just skewed the complete wrong way. I'm not a political guy, but I follow EB on Twitter, and I've met him a couple times. And that's a God-fearing man who deserves to be in charge of your outfit up there. I wouldn't trust Christy Clark to walk a dog. I mean, I think she's beyond awful. And I think if the right people were to be in charge of the government, I think housing would be no different than timber, fishing, tourism, things like that. It would get more in line with reality, which is what you guys really need. And frankly need badly.
Some people have mentioned that up to 50,000 people a year move into the greater Vancouver area. Is that what should be dictating the price of a home, not some other foreign influence?
Yeah, I mean, housing in any community should be used as shelter. If you want to speculate on stocks in either direction. And the people coming in or people buying homes to take money out of a totalitarian regime to buy empty houses in Vancouver is a dangerous dynamic that needs to stop. It doesn't do anyone any good.
Mark, how can people follow you on Twitter?
At Alderlane Eggs. ALDERLANEEGGS.
Mark, thanks for being on This Week in Money.
It is my pleasure. Good luck. Have a great new year, and let's do it again down the line and see how things look.
My guest has been Marc Cohodes, a noted short seller who wants to save Vancouverites from suffering the very worst when it comes to real estate. Coming up, Payton Nyquvest next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Payton Nyquvest. He's a Vancouver investment advisor at MackeyResearch.com. Welcome back to the show, Payton.
Hey, Jim. Thanks for having me.
How did the Canadian equity markets do over the past week?
The TSX had a high of 15,513, low of 15,380, closing at 15,497. The TSX Venture had a high of 797, low was 788, closing at 794. And the CSC had a high of 830, low was 806, closing at 829 for the week.
What were the big movers on the Canadian markets?
I think the golds have continued to rally here from the beginning of the year. The gold actually got back above 1,200, so I think that's been a lot of the driver, especially on the venture.
Has that been a real positive for Canadian producers?
Yeah, I think the general sentiment starting the new year is quite good with the rally in gold, and you're seeing quite a few big gold deals getting done here to start the year.
Are people being a little more cautious when it comes to marijuana stocks?
Yeah, I think people are starting to get a little, the valuations on some of these things. People are getting a little worried that that's getting overweighted.
Payton, thanks a lot for chatting with us.
Great, thanks for having me.
My guest has been Payton Nyquvest, Vancouver investment advisor at MackeyResearch.com. That wraps up our show for this week. We'd like to thank our guests, Ross Clark, Marc Cohodes, and Payton Nyquvest. And thank you for listening. Coming up, a company showcase update with CEO and President of American Manganese, Larry Reaugh. If you have any questions for us, you can email us at info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. We're speaking with Larry Reaugh, CEO and President of American Manganese. Larry, welcome to the show and welcome to the new year. We're speaking on January 11th, by the way.
Okay, Jim, I'm glad to be on the show, and it looks like a great year developing for all the markets, and I think this Trump rally has got some real legs on it.
Well, here in Canada, what's happening for American Manganese?
We've had an announcement today about receiving a government grant for our recycling research, and I'd just like to expand on that a little bit. The grant is from IRAP, who puts out small grants. They do a lot of heavy due diligence, and obtaining the grant takes quite some time. Actually, we applied, I think, in February of last year. But needless to say, what the grant does for us, it helps us defray some of our costs, but it also adds a lot of credibility to the company, and that's kind of where I want to go today. What we're talking about is credibility. And since we've been involved in the recycling aspect, and our focus has been on the lithium-ion batteries from electric vehicles, we've gained a lot of credibility that may not be recognized in the market yet. Now, the grant today will pay for about half of our ongoing program, which is about $120,000. And but that doesn't mean we won't be applying for further grants down the road. And once we start moving into the pilot plant stage, we'll be looking for different sections of the government to make application for much larger grants. But what I'm happy to be able to release that the government is now, actually saying that we have a worthwhile project and it's worth assisting in. So again, that adds a lot of credibility. And we look back and we see since we've started our proof of concept work last year, we were invited to the NatBat conference. And we were invited there because they didn't really have any advanced recycling projects that they could have presented at their show. And again, we were attending the show. We did the presentation. Chemetco did the presentation. And out of that, we came back pretty solid with the idea that we were probably the most advanced project out there. And that we were talking to a whole bunch of people that we will eventually be talking to about their product, which is the spent batteries. And that is the EV companies and the battery manufacturing companies. So, again, then that bad invitation did what? It added a lot of credibility to the company. Then we look at the board of directors, and we've added a financial guy from a fund in New York onto the board. And again, I have to tell you, and I don't think I'm telling any secrets out of school, that they did about 8 months of due diligence on us, right from the early in 2006, or late in 2015, before they got involved in helping us finance the company. And later, we appointed one of their lead guys to the board of directors, Kurt. So, again, this says he sees something there that he figures is credible. So that's credibility. And we recently set up a advisory board in which we had Dan McGroarty, who's does a lot of lobbying and interaction with the governments in Washington, D.C., and he's on quite a few committees there, on specifically on strategic metals, and he's joined the board of advisors. David Langtree, who holds several patents in his own name, became quite wealthy from patents, and is a major shareholder. He joined the board of advisors. And a recent addition is really going to be helpful down the line, because he's gone through all the aspects of developing a idea into a credible battery and actually commercializing it. So that is Shalish, and Shalish is got that award for $500,000, which is highly competitive for that award out of New York, and it's the largest award, second largest award given, the first one being $1 million. So you can see that we have attracted the right kind of people to our project. And now, of course, my phone calls are getting to be much more involved with due diligence and looking at the credibility of the company, because that's important. It's important that not only is the company talking about what a great project they have, that other people are recognizing it. And you have to remember something that people seem to forget, is that Chemetco is an arm's-length research contractor. They don't own anything in the company, and we don't own anything in them. So they are totally arm's length. And Chemetco have been, doing our research work now for, God, I guess it's going on 10 years. So, it's the thing that I just wanted to point out, that people don't necessarily recognize, because it comes and, starts and stops when you start gaining that credibility. We also have invitations outstanding on other situations where we can present. And, if we decide to move ahead, well, I'll be announcing those. And again, that's in fields where, we don't have to, the only thing we have to pay for is to get there. And the rest of it, the presentation is informational for their group. So I have to say, Jim, that the market, responded to the grant very well today. We traded between Canada and the U.S. about 3.3 million shares. And we closed up. But one thing I'd like to point out, which has nothing to do with credibility, is that somebody always manages in the last few seconds of the day to close us down from where we've been trading most of the day, and that could be a half a cent or a penny. It happened again today, it happened yesterday, and it's been happening quite regularly. And, I look at that as manipulating the price down, but I just wanted to make people aware that this happens. I'm pretty sure that most of my shareholders recognize that. And it doesn't mean anything as far as the next day's trading goes. After a while, people recognize what's happening. And if they want to buy the stock, they buy the stock. If they want to sell the stock, they sell the stock. It's as simple as that. So I think we've had a tremendous day. It's a tremendous start to January. Work is ongoing. Mike McLeod and our Chief Operating Officer and our CFO had meetings this morning down at Cometco, so we're getting caught up on the progress that's been made there. And as it becomes more, as we get results, we'll make those available to the market. And, so all I can say is, that when I looked at today's release and thought about what was happening in the company, I was very happy to report that, the company's attracting the right kind of attention.
Larry, when you first started off, did people give you much credibility when it came to the recovery and recycling of lithium, something a lot of people think we might not have enough of?
Well, certainly we did get spurts and starts and stops on that. We first announced that we got some, heavy trading, and but for the most part, everybody sat back and really wanted to see, if we were just puffery or if we were going to put our money where our mouth was and come up with something that said, yes, this works, and we've done that. And now, more people, more solid investors have been coming in for some time. And I think the sophistication, and I don't mean that in understanding the markets, I mean that in the industry itself, in the environmental aspect of it, and the circular economy that we're proposing, are seeing the merits of the project, and we're starting to get some of that buying coming into the market. So, yes, I think ever since we first started talking about it, people were very interested. I mean, it's going to be millions of spent batteries a decade from now, and this could be a very robust business, and that's what we're shooting for.
Larry, can you give us some details about where American Manganese is traded?
Well, it's traded on the TSX Venture Exchange and under the symbol AMY. It's also traded on the U.S. pink sheets under the symbol AMYZF. And Frankfurt, it's 2 a.m. You can reach the company at our website, which is www.americanmanganeseinc.com, or you can phone at 778-574-4444, or you can contact me on my email, which is my last name, REAUGH, at Amy, our symbol, MN, the symbol for manganese.com.
Larry, thanks so much for chatting with us.
Thanks, Jim.
This interview was on January 11th. We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.